Hi there guys, welcome back to another video, and in this week's video we're going to be discussing how I invested my first £5,000 as a teenager, what I invested it in, how I did it and why I did it, and then hopefully the projections for the future of my investments. So yeah, obviously with investing it's very subjective, so my first 5,000 is going to look completely different to yours. But yeah, let's just jump straight into it anyway. So my first investment, and I guess you can't really class this as a proper investment, but it's an emergency fund. And essentially what this is it's just a little safe fund for me, just in case if worst comes to worst. So basically I put £1,500 into this to begin with, that's where the first of the 5k went, and I'm adding £70 a month to that every single month. And essentially what this is it's just a fund which keeps me protected if worst comes to worst. So essentially this is perfect for a time like now, where there's uncertainty in the market and people might be at risk of losing their jobs. Basically what this is if all your investments, if everything comes crashing down and you've got nothing left, at least you know you've got that buffer stock in the emergency fund account that you can really rely on. So essentially this account, I fingers crossed intend not to touch. It's worst case scenario, it's when everything comes crashing down, I'll at least know I'm still protected in some sort. Again, this is very important when beginning your investing journey, because again you just want to have that clarity of security really, just in case if everything goes wrong. So again, this has been very important for me when I first started investing, and I definitely advise it for you if you're just beginning as well. So my second investment, and I kind of guess my first actual investment, would be physical gold. Now physical gold I bought at the age of 17, just before my 18th birthday, as it kind of was the only thing I could invest in, as you do have to be 18 to invest in anything else. But yeah, gold, I did a lot of research on it, and I decided to go for the physical rather than the stock, the ETF and whatnot. Main reason is because there's less supply of the physical gold, which means the demand is always going to go up, therefore, and historically, the price of gold is going to go up over the years. But yeah, gold was an amazing investment, and again, the return hasn't been amazing, but again, I'm not expecting it to outperform other investment models like stocks and property. It's kind of just a safe haven for my money. It's a safe haven for interest, going up against the banks and everything. And the return I'm seeing now is around 3 to 5%. I did reach 10, but it did dip a bit. But basically, it's just better to leave it in physical gold, whereas rather than leaving it into a bank where I'm getting 0.1% interest on it. So again, gold has been a very good asset to myself. I do intend to buy some more going forward in time, but for now I'm just going to hold back, as the price doesn't really matter too much, as if you are investing for the long term, it's 99% guaranteed that it's going to go up over the long term, as obviously you can't create gold, so there's always going to be a demand for it where the supply isn't really going to increase. So yeah, gold has been an amazing investment for myself. If you haven't invested into gold, then I definitely reckon you should look into it, as it can be a great asset class. So yeah, gold has been an amazing investment for myself. In terms of how much I put into gold, it was just over £500. I bought 2 5-gram bars, and believe me, they're a lot smaller than you think. But again, you can't be expecting anything too big, but again, it just maintains the value, which is really good, and obviously historically and over time it is going to increase, so that's absolutely amazing. My third investment, and where I've parked the majority of my money really, would be in stocks. So essentially I started this as soon as I turned 18, and it was such a passion of mine. I find it so interesting because on a day-to-day basis it's going up, it's going down, so that's really good. So I invest in 4 companies as of now. That would be Fiverr, Neo, Amazon and Tesla. Some great companies with some huge potential. In terms of going through them individually, altogether there's just around 2,000 I put into stocks, as again it's my prime asset class, it's my prime investment model as of now. But yeah, in terms of the companies I invested in, the first company I invested in was Tesla, and that is the majority of where my money is really, and that's 65% of my stocks portfolio. I've just got over 1,000 in Tesla, and yeah, it's been a great company. It's very volatile, it's going up, it's going down all the time, but again, I'm buying for long term, so hopefully in the long term there is going to be an increase. The return I'm seeing now is just over 8.5%, which isn't amazing, but in all fairness, it's still really good. Again, I do expect the company to be going significantly higher. The next stock would be Amazon, and Amazon is just a really sustainable growth company, and I trust them a lot. Again, I didn't put too much into this. This just holds 15 to 20% of my stocks portfolio. Again, I am seeing just a 2 to 3% return at the moment. I was seeing like an 8 to 10% return, but it did dip a bit, unfortunately. But again, the thing with Amazon, I'm not expecting to see dramatic increases with them. I just see it as a nice, safe investment. It's one of those companies that is just going to be sustainable in the long term. And I mean, Amazon over lockdown have just been crushing it. Their growth has been amazing. What they've done is just incredible. So over the long term, I can see them being a really successful company, and maybe overtaking Apple in the most valuable company in the world. But yeah, Amazon has been a great investment for myself. Obviously, I'm not seeing too great of a return, but again, it does beat the banks, and I am still seeing growth within my money. So yeah, it's been a very good investment. My next investment, and this one I kind of regret, was Fiverr. I wouldn't say I regret it too much, but again, I didn't do too much due diligence into the company. I did buy when they were a bit too high, although on the day they did drop 5%, so I thought I bought it at a bargain, but unfortunately they did drop another 10% a week later, so that's it's unfortunate for myself. So yeah, currently it does only hold 5% of my portfolio in stocks, so again, nothing too major, but I am seeing just a 10% loss at the moment. I have been doing some more due diligence into the company, and although their financials are expected to come out soon, and they are expected to be significantly good, hopefully that will change the price of the stock and increase my return. And my final investment, and the highest returning investment, would be NIO. And NIO is often referred to as the Chinese Tesla. And again, I bought a couple of weeks ago now, and thankfully JP Morgan predicted the price to double in the next few years, which kind of caused the stock to soar. So I saw a 20 to 30% increase on my return, which was significant. Currently, NIO, it just holds over 20% of my portfolio value. So yeah, it's a great investment. I'm currently at around 18 to 20% return. It has dipped a bit since JP Morgan made that announcement. But yeah, overall, it's been a very good investment, and the plans of the company does look really good. Although they are kind of over leveraged and in quite a bit of debt, it doesn't concern me as much, because their main goal was to expand overseas into the US, into the UK, into the European market, but because of COVID they were unable to do that, so they are just operating in China as of now. But hopefully when they do have chance to expand, then the share price and over time it'll just soar rather. So again, I've got good hope with that company, and hopefully it'll provide me with a good return. But yeah, they're all my stocks that I currently invest, or the individual stocks as of now. Overall, I'm seeing an average return of 8%, which isn't amazing, but again, it beats the banks, it beats any other of my investment models so far. So it's been quite a good investment, and it's probably by far the most enjoyable, as every day you get to see it go up, go down, and although it's bad when it goes down, it can be very interesting. But yeah, as of now, I am seeing an 8% return, and all the money I put into that was just 2,000, so that is my highest amount that I've put in of the 5,000 so far. And then the last investment that I went for is similar to the last in terms of stocks, but it's just a stocks and shares ISA. So again, I use Moneybox for this, and essentially I don't manage the investment at all. I just put it into a fund, and then other people manage it for me. And as of now, I've gone for a medium risk, and the return I'm seeing is around 3%. I put around 1,500 in to begin with of the 5,000 altogether, and I am adding around £40 a month into it. Again, the return isn't amazing, it's just 3%, although over the long term, it's one of those things that you can't get rich from it, but again, over the long term, you are going to see great growth from it. However, I have moved my risk to very high now, because I'm young, I'm able to take those risks, so hopefully, fingers crossed, all goes to plan. But yeah, again, I would recommend everyone to get a stocks and shares ISA, because again, it's just simple, and again, it kind of does depend on the market, but usually over the long term it is going to go up, and it's just very simple to have. It's another place to put your money. It's better than in a bank, and yeah, overall it's been a very good investment for myself, and I definitely look into it as well. I use Moneybox, and Moneybox has been great. It's a very easy app to use. It's definitely worth it, as the app in itself is very good. The return they get me is amazing. Like I said, I'm currently just sitting over 3% right now, whilst the market's a bit uncertain. But yeah, again, Moneybox is amazing. They put your money into all kinds of funds, index, individual stocks, golds, property, cash. So it's very diversified, can be very safe, although it can also be very risky. So it's not guaranteed money, but it's a lot safer than if you was to invest in individual stocks yourself. And that kind of concludes all the £5,000 of my first investing. So again, tried to make it as diverse as possible, although it could be even more diverse. I know a large amount of my portfolio is in stocks at the moment, just over 50%. But again, it's kind of all I can do at the moment as stocks. As we know from the last video I did, is low barrier to entry, and it's giving me some good returns. Although property is something I'm obviously interested in, it is quite a high barrier to entry, although I am looking into different programs such as crowd property, where essentially you just act as an angel investor and you put some money in for a fixed return over a certain amount of a time period. So I am looking into that, and hopefully I can add that to my investment portfolio rather soon. And yeah, that's practically everything. We'll just go over them again. So obviously we've got the emergency fund, which is the extra layer of security. That's currently at £1,500 when I first began. My second investment was gold. It's a great hedge against interest rates rather, so it just beats the bank. It's safe. Historically, it's going to go up over time. I've just put over 500 into that. And obviously we've got the individual stocks, which I've chose myself, and that's where the majority of my portfolio is. Again, there's around 2,000 in all the stocks altogether. Then obviously we've got the stocks and shares ISA, which is similar to the stocks, just over 1,200 in the stocks and shares ISA. That's been great. And then obviously we've got the savings accounts, which is very, very essential. Although I haven't touched upon it too much in the video, I do recommend that everyone does have a savings account, as it helps you buy those bigger asset purchases such as property. Obviously when I turn 21, I hope to buy my first property, and obviously that's quite a high barrier to entry, which is why I've got the savings account, which is why I put money towards it every single month, just so when I do turn 21 I can make that purchase as soon as possible to add to the portfolio. But yeah, essentially that's been everything. That's how I invested my first £5,000 as a teenager. It's not as diverse as I want it to be, as the majority of it is in stocks, but it is as diversified as I can make it as of now. But yeah, again, that's been great. I hope you guys have taken something away from it. Do be sure to comment below how you invested your first £5,000 or how you're planning to do it. And yeah, we'll see you next week.